So we have full complete syllabus. Now we are covering the 100 marks case studies. Before moving towards exam, we must be having at least 6 to 7 written practice of case studies. At least 6 to 7. At least 7 case study you must have practice in written form before moving towards exam. Otherwise, you are going to try the exam. So discuss a case study. 100 mark case study is there. This is the case study before the pre-scene was introduced. We will cover some previous case studies, cover some new case study with the pre-scene, because we need to get an approach, we need to adopt an approach how to tackle different kind of requirements, how to analyze the data available in the case study scenarios. So if we look at the case study, it's starting from here, then there are requirements, then it's moving forward. There are further detail about the case study. And it's going on till that. So what we need to do, we need to start reading the case study, move towards requirement A, and then read the case study, and then attempt part A. And after attempting part A, see what is part B and other parts. So you are Hui Lui. Your name is Hui Lui. A management consultant leading a small team which has been commissioned to prepare a consultancy report for the Data Communication Services DCS company directors to help them plan for the next 3 years. So you are a management consultant and you are going to prepare a consultancy report. I mean, you are providing business consultancy to the company. The name of the company is DCS, Data Communication Services. And you are going to prepare a consultancy report for the company future plan for the next 3 years. In your main focus is to prepare plan for the company, and that plan is for next 3 years. And you are what? Management consultant providing business consultancy services to DCS company. DCS company has 2 product areas. The largest area is the manufacture of data communication components, which it mainly sells to original equipment manufacturers. The other smaller and less developed area is based on supply and support contract for specialist IT management network system, mainly to domestic medium-sized enterprises. So companies operating in 2 areas. One is a data communication component. This is the large area, might be they are generating their most part of revenue from this area. And the other is a smaller area, might be they are generating lesser revenue from this area, and that is what? Supply and support. And they are operating in IT industry. You are a qualified accountant, and your colleague are Danny Lehman, a company researcher, and Freddie Lithium, who is a part qualified finance professional. You and your team have collected and analyzed the following information about DCS company to help you prepare the consultancy report. In you and along with you, there are some other persons, and you are going to prepare consultancy report for the company. In consultancy report, you need to prepare plan for the company for next 3 years. Exhibit 1, a report on DCS company organizational overview, the external environment and business models sourced by and prepared by Danny Lehman, your colleague. In Exhibit 1 is having information about the company and its industry market. Exhibit 2, a transcript from interview which was held between you and Java Paraya, the CEO of DCS company. In Exhibit 2, there is a detail about interview between you and company CEO. Might be you have asked some question and he has replied to those questions. What question you have asked could be information about the business. We'll see. Exhibit 3 is summary of financial and business performance. Financial and business performance of DCS company extracted from the integrated report from 2012 to 2015 presented to you by the finance director of DCS company. So exhibit 3 is having detail about finance and business performance that is extracted from integrated reports from 2012 to 2015. There will be some financial data, non-financial information. Exhibit 4, the October board report. A recent board meeting notes which include strategic choice facing DCS company presented to you by marketing manager of DCS company. Mean this is what board report, mean board meeting minutes, where they have discussed different strategic choices that company going to make. And exhibit 5, an evaluation of the alternative future strategies. Alternative future strategies being considered by DCS company board, prepared and presented to you by your colleague Freddie Latham. Exhibit 5 is about detail about evaluation of a company future strategies. And exhibit 6, minutes from the focus group meeting you held with middle management of DCS company. Minutes from the focus group meeting you held with middle management of DCS company, mean minutes of the meeting where you discuss some things. So exhibit 1, organization information, environment, industry, market information. Exhibit 2, interview between you and company CEO. Exhibit 3, financial and business performance through integrated report. Exhibit 4, board report for strategic choices. Exhibit 5, evaluation of strategic choices. And exhibit 6, meeting between you and middle management. Following your findings, you are now starting to prepare consultancy report and associated tasks for DCS company. As per pre-seen, first we will read the complete case study scenario, then we'll move towards the requirement. So exhibit 1, background report to the DCS company. To Hui Lui from Danny Lehman, organizational overview, meaning this report. Exhibit 1, we are having organization overview, mean information about the organization, its external environment, mean industry, market, competitor information, and a DCS business model and a business model like structure of the company. Organization overview, data communication system DCS, a publicly listed company on the small companies capitalization, small cap index of our national stock exchange. Used to be a privately owned high technology company established in 1997 by computer engineer Java Piraya. Due to a rapid expansion over the following years, DCS needed to secure additional capital to fund its future growth and was floated on the National Stock Exchange in 2006. So in 2006, currently we are in 2015. So in 2006, they have listed their company on the stock exchange because they needed additional fund. Who formed the company? A computer engineer, Java Praya. He is the CEO now. This allowed Java Praya to realize his majority shareholding in private company. 30% of flotation was purchased by institutional investor. And DCS also borrowed long-term funds to leverage the newly issued share capital. Before flotation, the company was almost exclusively financed from the founder's share capital, retained earnings and short-term finance. But after flotation, company have moved for the long-term funds as well, long-term finance, as well as they have issued shares to the public. External environment, industry marketing. Sure. DCS has its headquarters in Paradigm, a prosperous trade nation with a stable and well-established political system, and which has a highly developed labor laws, including a national minimum wage and a newly introduced obligatory contribution pension scheme. So that country where they are operating is having a stable, well-established political system, and they have a highly developed law regulations as well. And the government, like many government worldwide, has invested heavily in national telecommunication infrastructure, which has led to significant growth in social media, and where virtually 75% of population are connected to the internet through a range of devices, including mobile technology. And government also has invested in telecommunication infrastructure, and you are operating in IT sector. The government is also proposing a new carbon tax, which will affect companies which manufacture and provide IT network services such as data communication components and system. They are going to introduce new tax for the particular type of business where we are operating. The electronic and IT industry has recently been identified as a sector with an increasing carbon footprints caused by their applications such as components, cooling devices, complex telecommunication network components, and cloud computing technology. Although DCS company can approximately estimate its total carbon footprints from the manufacture and supply of components from its factory, it has not yet developed a formal system and processes to manage its carbon footprints throughout the value chain. And companies are not focusing mainly on carbon footprints, and government is going to introduce new tax. Business model. DCS has two distinct product service areas: data communication components, manufacture and supply, and maintenance of network management system, including technical support. They are operating mainly in components and supply and support. Main area is components, sale of component, and less revenue they are generating from supply and support. The DCS employees are a mixture of technically qualified engineers working in research and development, factory staff, manufacturing and assembling products, and an IT sales service support team. Since the flotation of the company, 60% of the production employees in the data communication components factory joined a major trade union. In after flotation, 60% of employees are attached with the trade union. I mean, labor is having strong bargaining power. In 2012, the country suffered an economic downturn, which led many companies to postpone technological investment. And by then, DCS employed 150 full-time employees. From 2012, there is economic downturn. The main revenue source for DCS is the high volume, low cost data communication components manufacture part of the business, and it has 1% of the total market share. 99% market share is with other competitors, which accounts for approximately 65% of DCS total revenue. There, 65% revenue they are generating from where? Components. That's why it is their largest area of revenue. This means 35% they are generating from system and support. DCS mainly sells and supplies a large volume of data communication components to original equipment manufacturers, 30% of which are based outside Pyramid on a continent which has a single currency, which is devaluing against the Pyramid dollar. 30% of their sale is with a country called Pyramid, now outside Pyramid, and that country currency is so volatile. Success in the data communication component sector comes from the economies of scale achieved by producing a high volume of reliable components and keeping prices low. DCS company has achieved this despite producing components in a country where there is a significant employment legislation setting minimum wage rates and conditions. So the second product area is much smaller and is based on supply and support contract for specialist IT management network management system, mainly to domestic medium-sized companies, which currently yield a relatively higher gross profit margin than the data communication components products. This is second area of their business, system and support. A key aspect of this second product area is the installation and support of big data analytics capability along with cloud computing storage, which can be used to replace existing costly IT infrastructure such as unsophisticated data warehouse to allow business clients to collect and analyze more targeted and timely data about their own customer and purchasing pattern. Mean by using big data analytics, cloud computing, our client, what they can do, they can collect and analyze data on timely basis. They can find purchasing pattern of their customers, and much of this can be obtained from data held within social and business networking software. Exhibit 1 was about company overview, its external environment overview, and business model, mean how much revenue you are generating from which type of business area. So let's move forward. Now we are moving towards second exhibit, that is interview between you, who are you, management consultant, and company CEO, Java Piraya. So transcript from interview held between you and Java Piraya, the CEO of DCS company, you. Thank you very much, Mr. Piraya, for showing me around the office and factory. I found your staff and their comments very interesting. First of all, could I ask you to tell me how you would describe how your company is structured and managed? So you have asked him about structure and about management of the company. Java Praya, the CEO, I would describe DCS as a fairly highly centralized in top management preparing decision and communicating to lower level. That is formal also. I suppose in management speak, mean he preferred top management should prepare strategies. We would describe the DCS management structure as a functional bureaucracy, highly formal structure, tall structure that is run according to rules. We prefer not to allow too much managerial or departmental autonomy for their own good, of course, to ensure that they act in the best interest of DCS and to avoid irresponsible risk taking, which unfortunately has happened occasionally in the past. He said, we try to keep every decision with the top management so that we can avoid risk. They are risk averse. We expect middle managers to respect and respond positively to senior management requests or directives. In whatever top management directing, they should follow that and not to question these unless they are very sure of their facts. And they are not allowed to ask questions in authoritarian style using. This is probably a legacy from the pre-flotation area. Mean before listing, the same way he was running the business, where much of the strategic direction was always decided by me and my closest senior directors, most of whom were my family and trusted friends. Okay, this is about structure, formalized structure, machine bureaucracy, centralized decision making, no delegation of decision making authority to lower level. Would you mind explaining how your company is directed by describing your corporate governance arrangement to me, please? Now you asked about. how you have managed the company according to corporate governance, mean which codes you are following, how you are following. Java, yes, I can. Please look at this chart. So Java hands you an extract of the organizational chart represented below. So he handed this chart. And according to chart, CEO and chairman Java Piraya, in he's holding both position of chairman and CEO. This is against corporate governance code. One issue. We don't know whether there is any requirement for corporate governance or not, but we are just highlighting this is against corporate governance. And then marketing director Jules Derby, production IT director Tony Norbury, finance director Tosh Mondal, HR director Trish Hopkins, and non-executive director Asaf Patel. If you look at this, it could be all these are executive directors, and there is only one entity. He himself is also executive director. So marketing director Jules, production IT director is Tony, finance director Tosh, HR director Trish, and non-executive director Asaf. Java, since 2006, DCS has been governed by a board of directors with me acting as CEO and chairman. Among me, giving me sufficient control to effectively direct the company and take a strong leadership over the board. Yeah, we are having information. We don't know whether there is any requirement for corporate governance criticism or not. We are just getting information about the company. So he's saying, I am leading the board of directors. Along with me, there are some other directors. The board comprised of marketing director Jules. He was my original sales manager employed by the company, who I have known a long time now. I mean, he was working as a sales manager. Now he is a marketing director in the company. He also have a production and IT director, Tony, who has been with the company for over 10 years. He's also with the company from last 10 years. He has a strong background in data communication hardware components. Tosh is our finance director. He joined the company just before the company was listed on the National Stock Exchange. Trish Hopkins is our female HR director, and we also benefit from an independent non-executive member on the board. We were very fortunate to appoint a staff non-executive director because he is a very talented businessman and also an executive director of one of our two largest suppliers. This means that he has a really good knowledge of our business and of the data communication industry. This means if he is executive director of your supplier and is also running any of the business, this means he is not an independent. There is question mark on independence of non-executive director. So we saw there are two issues relating to corporate governance. One, chairman CEO is a single person having dominance, unfettered powers of decision making, and a non-executive director companies having one, and that is not independent. And third issue, board is not balanced. There are 5 executive directors, including this CEO, and only one non-executive director. That is really useful background, Mr. Praya. So what's about standing governance committee, which presumably report to the board? Now you asked about the committees. Because according to corporate governance, company must be having 4 types of committees. Java, we have an audit committee constituted of 3 experienced network engineers. Are there? Network engineers who focus on and investigate internal control and quality failure when they arise. Well, the role of audit committee is to oversee financial matters of the company, so they must be having financial expert. This means this is not effective in ineffective audit committee they are having. Okay, let's see. To promote more independence, we have also appointed a non-executive director as the chairman on this committee, who is a former compliance officer at an airport, whose background is in air traffic control and aviation regulation, but she is also a telecommunication expert. Even she is not a financial expert. You, what about the risk committee? And do you have nomination or remuneration committee as well? DCS has no separate board appointment risk nomination or remuneration committee, mean no risk committee, no remuneration committee, no nomination committee. If risk committee is not there, business risk might not be managed properly. Companies unable to prepare separate risk management strategy. If a remuneration committee is not there, this means people might be involved in deciding their own pay. And if a nomination committee is not there, might be appointment of directors is not done fairly independently. Let's see. Yeah, just like a family business, exactly. Because he only was running, and now even after the listing, the same structure he's following. So we have found so many corporate governance issues. Chairman, CEO, single person, board is not balanced, non-executive director are not independent, audit committee is not effective, no risk committee, no nomination committee, no remuneration committee. At least of 6, 7 issues we can discuss if examiner asks about corporate governance. We don't know still yet. Okay. All strategic and long-term planning initiatives are initiated and decided upon by the main board led by myself. And of course, our management schedule and culture is such that we embed risk management through having that close control over staff that I mentioned to you previously. As far as salary, we strongly believe that all board members should be on a fixed salary to encourage them to take a longer term perspective rather than rewarding them with the short term performance related bonuses. I mean, they are not considering even the remuneration package properly. They are just focusing on fixed element rather than variable element. This means they will not be able to achieve some performance of the directors. As far as recruitment, remuneration and succession planning is concerned, I personally approve, what we say, CEO, and manage all middle to senior staff recruitment and staff promotion. So there is no need for formal induction process for our directors or senior management. If he is appointing, he will appoint yes man to strengthen his position. If he is deciding remuneration, so might be he is deciding his own remuneration, that is not independent remuneration policy. You, now that you are a listed company, how do you report to and engage with your shareholder, particularly institutional shareholder, because they are having 30% of shares? DCS does not have special governance or reporting structure to engage with shareholders. Well, according to corporate governance, you must be having regular communication with shareholder, including institutional shareholders. But of course, we do meet our minimum company law obligations in relation to statutory reporting to shareholder democracy, voting, and other constitutional rights. But we know about their rights, so we at least once in a year at AGM met with, but we don't have proper structure how to communicate with them. You, that was all very useful, Mr. Praya. But what I would like now is more data on the overall performance of DCS and a copy of the October board report, which I know was considering the strategic option facing DCS. Java, certainly, I will ask Tosh Mondal to send you our summarized integrated reporting data attached on a spreadsheet. I will also ask the management directors to send you board report for October. Thank you very much, Mr. Bra. So this meeting, this interview was mainly about corporate governance. Okay, moving towards Exhibit 3. That is extract of integrated reporting data from 2012 to 2015 from Finance Director Tosh. Financial performance. Profit and loss account shows financial performance. Balance sheet shows financial position. So financial performance, financial period 2012, 13, 14, 15 data is given. Sales revenue data is given. If we see sales revenue increased from 12 to 14, but from 14 to 15, it's decreased. Cost of sale is given there. Gross profit, if we see from 2012 to 2013, increase, 14 remains same, but for 15 decreased. Overhead expenses increasing. Profit before tax and finance cost increased. Tax expense decreasing, and profit for the year increasing, and after 2014 it's started falling down. Other data, number of employees. Companies having these number of employees 150 to 143, slightly decrease, then slightly decrease, and decreasing over the years. Why number of employees decreasing? Might be company going to redundant employees. Our employee are leaving the organization because they don't feel this is a happy place for work. And this is a major concern. If you are losing especially expert, competent, experienced people, this could create serious operational problem for the business. Staff turnover has increased from 4% to 10%. Percentage of orders delivered late out of total. How much order delivered late in previous 5%, then 7%, then 8%, now has increased to 10%. This means we are not making a delivery to the customer on time. And due to that, might be we are losing a customer and losing sales. Forward contract order book number of orders increased, then started decreasing. And we are losing customers. Customer complaints as a percentage of total orders and existing contracts, they have also been increased. And customers are not happy with your products and services. Employee satisfaction survey score decrease, mean employees are also not happy. That's why their turnover is high and number of employees has decreased. Investment in non-current manufacturing equipment as a percentage of sales revenue. So 10% of sales revenue they invested in asset in 2012, and now it has reduced. In out of total revenue, how much part of revenue they have invested in buying new assets? Before it was 10%, now it's 7%, means they are not becoming more innovative. R&D expenditure as percentage of sales revenue has also fallen and become half as compared to 2012. This means company will not be able to introduce something new in the market on time, so they will not be able to maintain good position against competitor. Carbon emission in kg per thousand sales revenue. It was 60, now has moved towards 80. In carbon emission, CO2 emission, your business have increased and government is going to impose more carbon tax. This is what integrated reporting data. Exhibit 4, the October board report for DCS company. The board of directors, DCS strategic overview, DCS company, Jules Derby marketing directors, 12th October, the date. This is what October board report. Introduction, this report based on information obtained from all executive directors of DCS under several main headings. The report highlights risk, opportunity, and future outlook for DCS. It also focuses on strategy and resource allocation, highlighting a key strategic decision which the board will need to make in the near future. In about the future direction of the company, the discussion with the board members. Risk and opportunities. What are the specific risk and opportunities which affect DCS ability to create value over the short, medium, and long term? And how is the organization dealing with them? This is about risk and opportunity. I mean, what risk companies are facing, what opportunity companies are having, and how company is dealing with the risk or managing the opportunity, capturing the opportunity. By 2014, the international market for data communication components started to saturate and decline, and this is your main source of income. So their revenue, their market has saturated. Might be customer moving towards alternatives. Their market is started declining from last years. For the supply and support of contract for the specialist IT network management system, we are now finding it increasingly difficult and costly to maintain the required level of network support. It is getting harder to recruit high caliber staff to DCS. Companies are finding it difficult to recruit high caliber staff. And your staff turnover is already high, your number of employees have reduced. And you are also finding difficulty in recruiting caliber staff. Okay, the headquarters of DCS, although a modern site, is in a geographical location which is unattractive for key personnel to relocate to. Our specialists in the system support side of the business are currently overstretched, because many key staff have been headhunted or taken early retirement. And company expert staff has already taken early retirement. And if your expert staff are leaving, you are finding it difficult to recruit expert people. So this could create serious operational problem for the business. That business will not be able to manage. I mean, there is operational risk. Lenders have until recently been quite willing to lend DCS additional long-term funds at competitive interest rate, but are now tightening their credit lines to the company and placing covenants on us to keep financial gearing within applicable limits. Now they have changed their policies. They are not providing loan on easy terms. They are also increasing their interest rate to compensate for the additional financial risk. It is unlikely that any future growth or investment can be financed from further debt, and we would not to use our considerable cash reserve or utilize internally generated funds. Currently, DCS has a gearing cost of equity capital of 12%. What is this cost of equity capital? Discount factor. While calculating NPV, we use a discount factor that's given how much? 12%. Future outlook. What challenges and opportunities in the DCS likely to encounter in pursuing its strategy, and what are the potential implications for its business model and future performance? Mean about future of the company. DCS currently manufactures approximately 50% of all data communication components, remaining they need to buy from the supplier. Used in its own product, the rest of the components, complete components, including semiconductor, microprocessor, are bought in from two multinational global supplier. This means supplier bargaining power is what strong. Why? Because there are multinational organization, mean they are having other opportunities around the world. So their bargaining power is strong, our bargaining power is low against them. These suppliers have since 2006 became the key players in the market through a succession of acquisition and merger, where previously there were many more suppliers, all with a much smaller market share. Recently, serious production problems have resulted from periodic component shortages from these key suppliers, creating significant delay in manufacturing, assembly, and customer delivery. One of our recently acquired OEM customer accounts for 40% of our sales in this area. We are having one major customer as well. Being a major, his bargaining power will be strong. Marketing forecast for 2016 and beyond indicate stronger growth from supply and sales, support and service, IT management services to currently installed network in the domestic financial sector, rather than from the manufacture of components to OEMs or for the installation of new networks to larger companies. I mean, there is a forecast of a high sale in future. The market is growing. That will attract new investors into the market as well. The other potential growth area is in the providing cloud computing and big data analytics capability to the SME sector. There is highly demand for cloud computing and big data analytics capabilities. SME sector, including DCS, there are currently only 3 companies which provide these specialist service in Hydrant. I mean, there are 4 companies who are providing these services. I mean, you are among the 4 big competitors of the industry. Strategy and resource allocation. Where does DCS want to go and how does it intends to get there? I mean, about future of the company, where they want to see themselves. As executive director, we need an appreciate strategy for the next 3 to 5 years. Our current trend, we are looking at approximately a 10% year-on-year decline in our revenue for the next 3 years. And if company operate like that, there will be 10% decline in the sales over the next 3 years. That's why they need to do something. At this forthcoming board meeting, we needed to discuss and decide on the best strategy for us as a company. We need to decide between 2 strategies. Do we realign the business to make it less reliant on the high volume, low margin components segment and relocate resources from the data communication segment into this high added value sector of network management and support? So first option, they are having realign. Realign me focusing less on components and more on system and support, because system and support sale prediction of higher is there, while data communication component sale prediction of lower is there. This is what realign strategy. But their main part of revenue is coming from components, 65%. Okay, to do this, we will need to further exploit technologies such as cloud computing and in particular big data analytics, which seems to offer lower cost data storage. In these technologies offer lower cost data storage. Better understanding of customer preferences through this, by using these technology, customer preferences understanding can be obtained in better way. And ability to develop more bespoke products and services, and companies can prepare their own software by using these technology, big data analytics and cloud computing. Alternatively, should we refocus on our core capability in the data communication component? So this is second option, refocus on the same components manufacturing area where we have such expertise, experience, and where most of our turnover is currently generated. So companies having 2 options. Realign, focusing less on components, more on system and support, mean transferring resources from components to system and support. Or refocus refocus me. We need to focus more on components so that by having some innovative models, we can increase the sale. By focusing more on components, we can reduce cost to achieve economies of scale. Okay, so companies having two options, either to realign their business. Realign mean shifting their focus from data components to system and support. Or refocus mean the same business model they will run, and they try to meet more cost efficiencies in components so that they can increase or at least maintain their sale because their main expertise are there in components. Give me 1 minute, please. Okay. In this exhibit, October board report, first we got some information about the risk and opportunities. And risk, what are the risk? Operation risk, company staff turnover is high. Staff are leaving, reducing number of employees. Even the expert people have taken early retirement. And companies finding difficult to recruit staff. And the company's cost of capital mean discount factor is 12%. And second paragraph, we got some information about company future. They are concerned about their future. And 50% of the components they are buying from supplier, means supplier bargaining power is strong. And they are having one major customer to whom they are selling 40% of their sales. Mean customer bargaining power is also high. And there is big data analytics and cloud computing demand as well in the market. And company is having two options because there is concern about the prediction like sales will decline 10% each year in next 3 years. So either they can realign business, mean focus more on system and support, transferring resources from components to system and support, or refocus the same way they will run business, but they will focus more on components to achieve cost efficiency or increase its sale. Conclusion. The DCS board should now evaluate the risk and opportunity and take a key decision. DCS also need to consider how it will important its chosen strategy and how it will finance it. See further information below. Forecast tangible benefit and cost resulting from various potential scenarios. In 2015, we have estimated that the net cash contribution from data communication component segment of the business is 1.55 million. And net cash contribution from network system and support is 0.85 million. By adding both, companies' revenue is what? $2.44 million. And this 1.55 is 65% and 0.85 is 35%. There are, after interest and tax, The expectation is that total cash contribution will continue to decline about 10% each year if we do nothing. And if we don't adopt any strategy, our revenue will decline 10% each year in next 3 years. Refocus mean focusing on the same model and more on components where we are experts so that we can maintain sale or increase sale. We can implement this strategy by reorganizing our sale and support team, making manufacturing cost efficiencies and targeting our data communication components customer more effectively. If we are successful, we estimate that we can at least maintain the total cash contribution of 2.4 million in next 3 years. And we can avoid declining 10% each year if we refocus more on the same business model. At least we'll be able to maintain 2.44 million. If you do nothing, then there is 10% decline every year. Realignment strategy. With a realignment of the business towards the network, supply, and support segment, the net cash contribution from the communication component sector is forecast to decline by 10% per year for the following 3 years. This is regardless of how the net cash contribution from the network and IT system support business is expected to grow under any of our assumptions. Forecast annual fixed cost and working capital saving from the decline in the data communication manufacturing area are expected to be 0.35 million from general cost. I mean, if we transfer resources from component to system and support, we'll be saving some fixed cost from components, that is 0.35 million, and will also result in annual carbon tax cost saving of 0.15 million. And if we produce less components, there will be less carbon emission and there will be less tax. So that we can say 0.15 by adding both, giving a total saving of 500,000 in $500,000 per annum for the next 3 years. Note that these forecast savings are independent of which growth forecast below emerge. So if do nothing, sale will decline 10% each year. Refocus, at least maintain sale. Realign, this will provide us fixed cost saving of $500,000, as well as the forecast that is component sale will decline by 10%, that will be there because we are now transferring our resources from components to system and support. Table 1 below shows the projected growth in cash flow from the network supply and supply segment in the next 3 years. The additional fixed cost of this investment and the savings to be made in the data communication division should the realign and additional investment take place. So table 1, alternative growth forecast for DCS company under the realignment strategy. Realignment strategy and probabilities for growth. Probability of growth materializing percentage. Forecast annual increase in cash and forecast annual saving from decline in data communication segment. Additional cash contribution from the network support business will grow by 25% each year for the next 3 years. This is one scenario. Means support and the system cash flow means sale will increase by 25%. And probability of this is what? 60%. And in that case, forecast annual increase in cash fixed cost, that is 0.75 million. And we'll be able to save cost from components, that is what? 500,000, 0.5 million. If we are moving towards realignment strategy, we're focusing on system and support more and transferring resources from components. Additional cash flow will generate by 15% but the probability is what? 30%. And in that case, the additional cash, we can add 0.45 from fixed cost, and we can save fixed cost of components by 0.5. No, if the cash flow of a system and support will increase by 10%, the probability is 10%. But the additional cash through saving that will be 0.25, and the saving of fixed cost from data communication components will be 0.5. Mean this scenario is having this probability, we need to incur this extra cost towards the fixed cost, and this we will be able to save overall. Exhibit 5. An evaluation of strategy choice facing DCS company. This is the longest case study. The other case studies are a bit smaller than this. This is the longest case study. So an evaluation of strategy choice faced DCS company. You asked your colleague Freddie Lithium to evaluate the alternative strategies based on the information contained in the October board report. Freddie has now given you his work in the spreadsheet below. Strategy 1. Refocus. Company will generate revenue of 1.55 from components and 0.85 from system and support, total 2.4, and from next 3 years, company will be able to maintain 2.444. This is refocus strategy. Now let's discuss about realign strategy. Realign mean we are going to focus more on system and support. And from system and support, how much revenue we are generating? 85%. If we will focus more on them, there are 3 scenarios. Either this will increase by 25% each year, either 15%, either 10%. And the probability of 25% growth is 60%. Probability of 50% growth is 30%, and probability of 10% growth is 10%. So this figure has been calculated if we add 25% more to 0.85. So we can get what? 1063 with the 25% increase in sale. How we have calculated this? 0.85 multiplied by 1.25. We will calculate what? 1.063. And then this 1.063 multiplied by 1.25 mean added further 25% of this. So 1.063 multiplied by 1.25, we got a figure what? 1.328. And then this 1.328 multiplied by 1.25, we got this figure. In the similar way, 0.85 multiplied by 15% mean 1.15, we got this. This figure multiplied by 1.15, we got this. Multiplied by 1.15, we got this. And with 0.85, we added 10%. How? Multiplied by 1.10, we got this figure. And with this 1.10, we got this. With this 1.10, we got this. Not we, company management have provided this. And then this is what expected value EV. How we calculate EV? Benefits multiplied by probability plus benefit multiplied by probability plus benefit multiplied by probability mean this multiplied by this plus this multiplied by this plus this multiplied by this, we got this expected value 1.024. And then this value multiplied by probability plus this value multiplied by probability plus this value multiplied by its probability, we got this expected value. And then 1.660 multiplied by 0.60 probability plus 1.293 multiplied by probability 30% plus 1.131 multiplied by probability 10%. By adding all three, we got expected value 1.493. Are you? And then it's the same data communication. We are generating 1.55 revenue from there. And if we are moving towards realigned strategy, the sale of components will decline by 10% each year. If we decline 10% of 1.55, that will be 1.395, mean 90%. And then 90% of this value will become this, 90% of this value will become this. Now, total cash contribution from strategy to realign, how much you will generate? This plus this is equal to, this will be the total cash you will be able to generate from strategy to realign. What we were generating from strategy one, refocus this. If we compare both, we got the differences. And if we see in difference, we are having more in realignment as compared to refocus. By how much more? By this amount more. How these figures has been calculated. Okay, then if we are moving towards realign, there is a additional fixed cost we need to make, as well as there is a cost saving from components of 500,000. So that has been incorporated here. This will be the revenue of system and support. And there are three scenarios. Will increase by 25%. Will increase by 25%. And there is a fixed cost we need to incur 0.75. This was. And the probability is what? 60%. So 60% multiplied by 0.75, we got these figures. If there is a chance of 15% growth, the fixed cost we need to incur is 40.45. But there is probability of 30% of this chance. So 0.45 multiplied by 30, we got these three figures. And if the scenario is saying there will be growth of 10%, the probability is 10% as well. But fixed cost extra will be 0.25. So 0.25 multiplied by 0.10, the same figure over there. So this is what expected value of additional fixed cost. This was expected value of revenue. This is expected value of additional fixed cost. But there will be cost saving as well. How much cost saving will be? 500,000 from component. And if we deduct this from extra cost, we will arrive at net additional cash fixed cost that business need to incur. Are you? Okay, now what we did, this incremental cash contribution we transferred here. And this additional fixed cost net we transferred here. And this will be extra cash contribution, positive, but this will be extra fixed cost that we need to make. So this minus this, we got a negative figure that is 0.091. This minus this, we got negative figure 0.018, and this minus this, we got positive figure 0.117. This is what incremental net cash contribution from strategy 2 compared with strategy 1. And as compared to strategy 1, the additional cash contribution is what? Negative 0.091 in a realigned strategy for year 2016. For year 2017, negative 0.018, but for year 2018, positive 0.117. Will be there. We are not covering that case study. That we will cover afterward. No, where? In my own case study, I do not have this long calculation. We not only just cover that case study. We need to cover 7 case studies before moving to that. You didn't get what I'm saying. What I'm saying is I don't have to put this in mind, right? Because I don't have this calculations. No, it will be there. It could be there. I couldn't find it. Could be there. Could be. So we are discussing different scenarios. Okay. So according to this, incremental cash flow they have calculated, like if company move towards realigned strategy, their payback period is 2 years and 11 months, and they are preparing plan for 3 years. And if your payback period is less than your plan, this means company should move towards realigned strategy, not the refocus, because its payback period was lesser than their plan. But there are some concern about the data. What are the concern? You are saying in next 3 years, if we do nothing, our revenue will decline by 10%. What is the source of this information? From where you got this information? Either you find this through past trend, either you find this from market research, or either you find this information from any of the consultant. So there is no information given. So there is doubt about whether will decline by 10% exactly, or more or lesser than this, or might will stable. One issue. Second issue, you are saying if we moving towards realignment strategy, if you're moving towards realignment strategy, there will be cost saving in components of how much? 500,000. What cost you will save if we move towards realignment? Still, you are selling components as well, producing components. What kind of these costs that you will save? There's no detailed information what these costs include. And then you are saying there are three scenarios, like if you move towards realignment, revenue will increase by 25% and its probability is 60%, revenue will increase by 15%, its probability is 30%, revenue increase by 10%, probability is 10%. From where you source this data? And even it is not seems logical. The lesser the growth must be having more probability, the more growth would be lesser chance of likelihood. But here, more growth having more probability, less growth is having less probability. How? And then you are saying you need to incur extra these fixed cost. Okay, in initial year we need to bear more fixed cost. In following year the fixed cost become lower. This seems fine. But what this cost include? Either you are going to invest anything, either you are spending on marketing. So there is no information for this as well. There are some doubts over the data. And here you have compared what? Only two strategies, refocus and realign. While explaining, you are discussing about a do nothing strategy as well. This is what a do nothing. What will be the cash flow using do nothing? That must also be compared. Then you should have decided. Okay, exhibit 6, note from middle management focus group meeting, the last exhibit. Notes from the middle management focus group meeting. Having read the integrated report data and studying the transcript of conversation you had with Java Piraya, you needed more background information about some of the key issues which had come to your attention. You therefore invited our representative team of middle managers to a focus group meeting and asked them key questions from which the following comments were noted. Number one, quote from a management accountant in the finance directorate. From finance department, management accountant quoted something. What he's quoting? When undertaking capital investment appraisal, capital investment means long-term investment while deciding whether we should invest or not. We have a strict policy of evaluating investment or project over a maximum of 3 years and to ignore cash flow beyond that. That's why they calculated payback period to less than 3 years and they accepted it. Mean this is your normal standard, like we evaluate payback period based on 3 years. To ensure that any investment we make must pay back within that time period, this ensures that we do not accept variable projects, unviable projects. Unviable mean moving above 3 years. So that's why relearning strategy payback period was less than 3 years, so it was selected. Quotation 2 from an engineer in the network supply division. What really annoys me in the fact that in 2011, the CEO and HR director introduced an annual staff survey. So company started annual staff survey. Why company takes staff survey? So that they can highlight issue. If they are having issue, they will be able to tackle them to improve staff services. Although they promised anonymity. Anonymity means secrecy. Like if any staff member saying something bad about the company, so his name will be kept in secret, will not be disclosed to anybody else. Because what company want? Company want improvement. And to improve things, he need information. If anybody providing information, his name will be kept in secret. The survey required us to give detail of our age, ethnicity, length of service, and the department in which we are employed. If you're asking about age, ethnicity, from how long you are within the company, which department you are working, ultimately management can trace a person who is that. There is no anonymity then. I mean, you are not just asking about a name, but you're asking about age, ethnicity, length of time period with the organization, and as department. And normally in one department, there are 4 or 5 people. And if even they are having the same religion, same ethnicity through age, you can identify who could be that. So there is no anonymity. Okay. I was called to a meeting last year by the production manager who implicitly threatened me and made comments such as, if you don't like work here, why not look for another job? Might be this engineer have provided comments against the company, highlighted the issues, but production manager called him in a meeting and say, if you don't like, go and work somewhere else. I mean, he is known. This person has provided this feedback. It was made very clear to me that this meeting was private and was to be kept confidential. I was not permitted to discuss the existence of outcome of this meeting with other members of staff, or there would be consequences. And he was threatened, don't discuss these things, this meeting to anybody else, otherwise you will be facing consequences. Such a poor behavior from the company towards their staff. Quotation 3 from a technician in data communication components division. I felt that staff satisfaction survey was designed in a way which dissuaded negative feedback. And key issues known to be of concern to staff obtained from the informal grapevine were deliberately omitted from the survey questions. In addition, the way the results were presented by managers and the visual graphics used seemed to play down the negative feedback and concerned only to the positive factors. You need to prepare questions where the answer could be relating to negative feedback. Some of question must be having answer about positive feedback, but they prepare feedback in a way like nobody should be able to provide negative feedback. If you're not getting a negative feedback, there is no purpose of taking feedback. Because against positive, you will not do anything. Against negative, you need to take action and resolve those issues. And if you have designed survey questions in a way that everything should come to us in a positive manner, employee will not be allowed to provide negative feedback. So there is no purpose for taking feedback. For example, emphasis was made on how well staff regarded their own performance. Obviously, everybody will say our performance is good. And that of their team members, which seems to have a more favorable feedback compared with other questions about confidence in the leadership of the company, like how you feel about company management, about leaders. So there was no question like that. How you happy with the workplace? How you happy with company policies? There was no question like that. I don't think this presented the true picture of our field. Quote 4 from a sales support engineer. We are rushed off our feet. And we do need to do something quickly. Due to key staff leaving, our sales areas are getting larger and it is difficult to get around to all our customers due to staff shortage. This means we have difficulty getting our orders in on time, dated, and are often late to appointments. Although sales productivity might be improving, because fewer of us are covering a greater geographical area, customers are not as satisfied as they used to be and are making more complaints due to staff shortage. After this meeting, you went back to your office and scheduled a meeting in the following week with Danny Freddy to start preparing consultancy report findings for DCS. And this is the end of the scenario. Now, if we move towards Now we are moving towards the requirement. We have studied the scenario, case study. Now we are moving towards the requirement that we will see after sitting in the exam center. Requirement 1A for 15 marks, 1A2 for 12 marks, and there are 4 professional marks. Altogether, 31 marks. 1A, from the information you have collected, draft a section of the consultancy report for the directors of DCS company to include the following. An analysis of the industry and market which DCS company is competing in using an appropriate model. You need to analyze the industry environment. We need to provide the proper format to just give me a minute. So if we are going to prepare our report, there is a format for our report. To whom you are going to write a report, his name, designation, CEO of DCS company. From Louis, management consultant, subject, or you can say management consultancy report for 3-year plan of the business. And then date. Then a small introduction paragraph as per requested. I'm going to prepare a consultancy report for the business in which I'm going to suggest some solution and plan for next 3 years for our DCS company. And then your requirement will start. There are 2 marks for this, professional marks. Are you with me? Okay, what's the requirement? We need to analyze industry market. How we can analyze industry environment? By using Porter 5 forces model. What they ask, an analysis of the industry and market which DCS company is competing in using an appropriate model. They haven't specified the model, but we know industry can be analyzed using Porter 5 forces model. So if we discuss about Porter 5 forces, there are 5 headings. Threat of new entrants is a high or low? Threat of new entrants is a high or low? We got some information regarding threat of new entrants. What was that? Political system is stable. That will attract a new investor to make investment in IT industry. Government invested heavily in infrastructure. But there are some legislation that are becoming strict. We employment legislation, carbon tax government is going to increase, so that will work as a barrier to entry. So these will work as barrier to entry. We are going to attempt a case study now. Yeah. We are going to discuss requirement of the case studies. The name of the case study is a DCS. DCS company. Okay, then we'll put the heading what threat of substitute. Is that threat of substitute high or low? There are substitute available. Like you are operating in component, system, and support. But there are substitute available. What are those? Cloud computing, big data analytics, and if company do not move towards a new innovation, the shift of customer towards substitute could create a serious problem for the company, and company will not be able to maintain its position. Are you? And then we need to discuss bargaining power of supplier. Low or high? High. Because 50% of your components you are buying from where? From supplier. Your dependence on supplier is high. In supplier power, we need to discuss labor bargaining power as well. And 60% of labor is also engaged with the trade union. And by engaging with trade union, their bargaining power is high. This means in case of crisis, company will not be able to manage this labor cost. And then we'll discuss about bargaining power of customer. High or low? In components for individual customer, it is low, but there is one customer who is contributing 40% of sales, who is our major customer, so his bargaining power will be higher. We will not be able to charge prices according to our wishes. What he is asking, we should be providing that. And then competitive rivalry. The market is expanding now, so there is more competition. We are having only 1% market share. This means 99% of other competitors. So against competitor, our position is weak. What else we can discuss in competitive rivalry? Economic recession. If there is economic recession, the market has become saturated. So in a saturated market, there is always issue of competition. Every company try to capture or retain customer through discount offers. Or they are trying to attract customers through marketing. So there will be high competition because the market has become saturated. For 15 good marks, we need to discuss these things. Are you with me? So let's take a break. After break, we'll move towards further requirements. So SBL, Strategic Business Leader, we were discussing about a case study. In a case study, we are having a 5 different exhibits. In exhibit 1, we are having information about organization overview, its external environment data, and business model. I mean, there are two areas where business is operating. Components, 65% of their sales revenue, and system and support, from where they are generating 0.85 million annual revenue. That is 35% of their total revenue, 2.44 million. And there is demand for market for big data analytics, cloud computing as well. And then exhibit 2, the interview between you and a company CEO, where we got some information about the company structure and company capital governance arrangements. And then exhibit 3, where we got information about integrated report, financial data, as well as some other data. And then exhibit 4, that was the longest exhibit, where we got some information about the risk and opportunities of the company, the main operational risk business is facing. Business is not focusing on environmental risk they are facing. Is that? Business is not focusing on the environment, they are facing environmental risk as well. And financial results, they not too much good, because their sale decline prediction is there. And then we got some idea like company is moving towards preparing their future plan, and they're having two strategies, either realign or refocus. And they concluded both the strategies, and based on the calculation, they decided the realignment strategy is having payback period of less than 3 years. So they chosen for realignment based on the data. And then exhibit 5, we got some information about what the staff appraisal, that was not based on anonymous, that is based on only getting positive information, positive feedback rather than negative. And company, and there was some information from the engineer in last paragraph, like customers are not getting their order on time. Companies are finding it difficult to deliver to the customer on time due to staff shortage. Okay, so requirement A1 we have covered. Moving towards other requirements. Requirement A2, part 12 good marks. An evaluation of the overall performance of DCS company. We need to evaluate overall performance of the company between 2012 to 2015 from an integrated reporting perspective. We need to evaluate using integrated reporting perspectives. How we can evaluate using integrated reporting perspective? In integrated reporting, we learned that company need to focus on 6 capital. So we need to discuss those 6 capital, whether company is meeting those capital or not. And if we move towards data, relating to integrated reporting information. So this slide mainly based on integrated reporting. And if we discuss about 6 capital, what was those 6 capital? Financial capital, human capital, manufactured capital, social capital, natural capital, and one was there intellectual capital. So these 6 capital company need to consider. Financial capital mean finance they need to manage, financial performance they need to manage, and what we can discuss under financial capital. If we look at companies sales revenue, sales growth, from 2012 to 2013 it was increasing, 2013 to 14 this percentage increase, and but from 2014 to 15 it has declined. So we'll discuss the sale growth here. You need to calculate sale growth from 12 to 13, 13 to 14, and 14 to 15. This means company is struggling to maintain their customer, company is losing a customer, and this could create serious problem for the company. Gross profit margin we can discuss from 2012 to 2015. If in 2012 it was more, in 2015 it has declined. This means companies are unable to manage its production cost. So GP margin we can discuss. Profit margin we can discuss. Operating profit margin, and that is also decreasing. This means company is unable to manage its operational expenses or fixed cost. What else is there? Any other ratio financial we can discuss? We can discuss interest cover. Interest cover we can discuss. Profit divided by interest, finance cost, and interest cover has also reduced. And if interest cover has also reduced, this means company will move towards insolvency if they unable to take any appropriate action. So these 4 ratios we will discuss under financial capital, and in financial capital companies performing badly. Their performance is poor. Are you with me? Human capital relating to employees. Human capital relating to employees. If we look at number of employees have decreased. Number of employees has decreased. This could create serious operational problem, and companies are finding difficulty to appoint new employees even. Staff turnover has increased. So staff turnover we will discuss. It has moved from 4% to 10%. This means company is not a happy place for work. That's why people are moving towards other organization. What else? Employee satisfaction. If we look at employee satisfaction, that has reduced from 72% to 61%. So company is unable to satisfy their employees, and if they are leaving the company, company will be facing serious operational problems. What else is there? Any other ratio we can calculate? Number of employees are there. Can we calculate revenue per employee? Revenue per employee, that will also be reducing. This means your employees are not becoming more efficient. Why? Because your more efficient experienced staff are leaving, and new employees are not that much competent or expert that they can generate or maintain the previous level of revenue per employee. Manufacture capital. Manufacture capital is what? Investment into the assets. Investment into the assets. Is there any other information? We are having information about percentage of order delivered late, forward contract order book, customer complaints, employee satisfaction, investment in non-current assets as a percentage of sales revenue. Investment in non-current assets as a percentage of sales revenue, it has decreased. This means company is not investing that much in asset that it was investing before. If you are not investing in your asset, ultimately you will not be achieving more cost efficiencies. You will not moving towards innovation, and this could create serious problem for the company. What else? Social capital. Social capital mean taking care about the society. Who comes in the society? Stakeholder in society. If you see, customers are also your stakeholder. Percentage of order delivered late. Order delivered late to home. to customer. This will affect the customer. This will put anger in the customer. They will not be buying again from the company because this has doubled from 5% to 10%. Customer complaints as percentage of total order, that has also increased substantially from 1.5% to 3.4%. And if you are not taking action against customer complaints, the areas where they are complaining, ultimately company will be losing customer, losing its sales. What else? Natural capital. Natural mean relating to environment. If we see carbon emission per thousand sales revenue has increased from 60 to 80 kg. This means instead of controlling CO2 emission, company is moving towards even produce more CO2 emission. And government have introduced new carbon tax. This means company will be facing new tax, mean they will be paying more tax as well. What's the reason behind this? Companies not investing into the new asset, new technologies. Old asset producing more CO2 emission. New technology will produce less CO2 emission. This we can discuss. Intellectual capital, R&D. In research and development, company before in 2012 was spending how much? 6% of their sale. Now they are spending just 3% of their sale, mean their performance regarding intellectual capital is also poor. If you're not investing in R&D, you will not be able to introduce innovative products, new products in the market. And the market where you're operating IT based is highly volatile. Product become obsolete quickly. And the competitor, the supplier who introduce something new, they capture the whole market. And if you are not investing in R&D, you will behind market. You will not be able to introduce something against competitor. For how many marks? 12 marks. We need to discuss these 6 headings. These 6 capital. Okay, moving forward. So number 1 requirement we have completed 15 plus 16, 31 marks. This means we must be able to attempt this part in 1 hour, or you can take 5-10 minutes extra because initially our speed is a bit slow. So you must be able to tackle these 2 parts in 1 hour, 10 minutes maximum. Because they are 31 marks, 31 multiplied by 2 minutes. Normally we are having 1.8 minutes for 1 mark. Even in this paper, if you multiply by 2, we'll be having 62 minutes. Okay, take 8 minutes more. But after 1 hour, 10 minutes, you should leave this part and move towards others. Otherwise, you will not be able to complete the paper. Part B. You are now reviewing the transcript of the interview you had with Java Piraya, where we got some information about company structure, where we got information about company corporate governance arrangement. So based on that interview, the CEO of DCS company, and you identify some key weaknesses relating to the governance of DCS company, which you want to include in the consultancy report. Explain the key weaknesses of the current governance structure of DCS company. You need to explain corporate governance weaknesses since it became a publicly listed company and recommending how they should be addressed, and you need to provide recommendation as well. 12 marks. If we highlight 6 weaknesses and provide the recommendation, we'll be able to tackle these 12 marks. What were the issues? The issues were dominance of single person. Means Praya is operating, having a both position of chairman and CEO. He will be having dominance. He will be having unfettered powers of decision. He will try to run company for his personal use. So what company should do? No, this is not a good recommendation. The chairman CEO should be separate. No, company should appoint an other non-executive director as a chairman. Because for chairman, business SE, he should be non-executive director. So company should appoint another non-executive director as a chairman. Second issue, board not balance. Because they are having 4 executive directors, one additional prior 5 executive and one non-executive. So this means executive director short-termism strategies will not be challenged properly. So to balance the board, company should appoint at least, and even he is not independent, so company should appoint at least 4 independent non-executive director to balance the board. And third, the non-executive director is not independent. Why? Because he is a director of a supplier company. He himself is a business, might be having any business relation with the company, or might be having a friendly relation with the Java Piraya. That's why he bring him into the company. So if he is not independent, he will not be able to evaluate strategies or policies of the company independently. So company should maintain independence of non-executive director by ensuring that they must not be having any other connection with the company except their hourly pay. And then there were 4 committees. First, ineffective audit committee. How it is ineffective? The role of audit committee is to oversee financial matters of the company. And this audit committee include engineers, IT professionals. There is no financial expert person in the audit committee. So they will not be able to review financial strategies, financial policies, financial statements, internal control system properly. So company should establish an audit committee of at least 3 independent non-executive directors. Yes. Mean the number of audit committee must be at least 3, and all should be independent non-executive director. And at least one member should be having a recent financial knowledge. One member must be having recent financial knowledge as well. Can we discuss this? And then there is no nomination committee. There is no nomination committee. Who is appointing the executive directors as the board members? Mr. Praya himself. If he is appointing himself, he will be appointing yes man to strengthen his position. So there must be a nomination committee for independent appointment of the directors. There is no remuneration committee. There is no remuneration committee. Might be directors involve themselves in setting his own pay. That's why CEO is setting, might be is setting his own pay as well. And that will not be independent remuneration policy. So company should establish a remuneration committee of independent non-executive director to define independent remuneration policy of the company. Can we discuss this? And no risk committee. And business is facing so many risks. Operational risk is there, environmental risk is there, even financial risk is there. Their finances are not better. Is that? Even market risk is there because they are facing too much competition in the market. Their sales are going to be declining in future. So for that, they must be having a separate risk committee so that they can identify, prioritize, control business risk on proactive basis. So company should establish a remuneration committee of majority non-executive director to define independent risk management strategy of the business. Company should establish a risk committee of majority non-executive director to define independent risk management strategy of the business. Yeah. So these, see, we have discussed 7 points. You at least should be able to discuss 6 points out of these 7. So we have covered part B as well for 14 marks. So 31 plus 14, till now we have covered 45 marks out of 100. Out of 100, we need to get at least 50 to pass. And these 3 parts, if we attempted it properly, because these were easy marks. So if we're able to get 35 from this, we can easily pass this paper. Part C of the question. Part C of the question. Under the strategy and resource allocation heading in October board report, the possibility of DCS companies supplying and supporting such technologies as cloud computing and big data analytics is referred to. Mean company should focus on cloud computing and big data analytics because this is in demand nowadays. Company is not providing that. To accompany the consultancy report, a representation is needed about the exploitation of such new technologies, required for 6 marks only. Prepare information for 2 presentation slides. You need to prepare 2 presentation slides. Slides mean box, PowerPoint slides. In PowerPoint slides, we write down only the bullets. If we need to explain any bullet, there must be underneath notes. So prepare 2 presentation slides to be presented to the DCS company board, including relevant bullets points and supporting notes, highlighting the key benefits and identifying the main opportunities presented by big data analytics to DCS company and its customer. In one slide, you need to explain, highlight benefits of big data analytics to customers. And other side, you need to explain opportunities for big data analytics to customers. So first we'll put slide 1, we'll put a heading slide 1. We'll prepare one box. We'll put the heading benefits of big data analytics. Here we'll put the bullets 3, 4. Here we'll put the notes, we'll explain those bullets in 1 to 1 to line. And then we'll put the heading what slide 2. We'll put another box. We'll put the heading opportunities of big data analytics. And we learned this big data analytics is what? Applying different analytical techniques on the big data to find a pattern, to find trends. To find patterns, to find trends. We must be having concept of big data analytics first. Then we'll be able to explain its benefits and opportunity. And there are some techniques that we can use. What are the techniques? Data mining. What else? Data analytics, voice analytics, statistical analytics. So these are the techniques that we can use, but we need to explain its benefits and opportunities. If we look at the October report, there were some benefits that we highlighted. Yes. Allow the business clients to collect and analyze more targeted and timely data. They can collect and analyze data. They can get information about customer purchasing pattern, and most of which can be obtained from social, as well as they can replace existing costly IT structures such as unsophisticated data warehouse to business clients. They can achieve cost efficiency as well. So these 3 benefits we can highlight here. We need to explain a little bit how cost saving can be achieved, but like they will not be using software, even hardware within the organization because they are accessing online, and they can collect the data about their customer on timely basis, real time data they can collect. Even they can manage their data on a proper way, as well as they can find different patterns of their customer, whether any of the customer sale has been increasing, whether customer order amount has been increased or decreased. But opportunities mean external, relating to market. So through big data analytics, company can get information about their competitor as well, how they are innovative, which competitor have introduced something new in the market. So we can get this information. Based on that information, company will be able to decide when they should introduce something new into the market. Through big data analytics, we will be able to identify customer requirement in the market, what they want, what they demand from the company product, so that we can modify our products, we can add more features to our products to make the customer happy. What else opportunities we can tackle through big data? By using big data, we will be aware about the changes in law regulation in the industry. If there is any changing happens in a law regulation, so that we can adopt those law regulation into our internal control system to ensure compliance. Three point, if we discuss in 2 slides, we'll be able to tackle these 6 marks easily, but we need to practice this. 3-4 times in past paper, examiner have asked to prepare slides. So part C, 8 marks we have tackled now. So 45 plus 8, 53 marks we have covered so far. Part D. Part D of the question. You have noted from information you have gathered that DCS company has an increasing carbon footprints, and government is putting more carbon tax on the businesses. And the company carbon footprints has increased from integrated import. We saw from 60 kg per thousand sales move towards 80 kg per thousand sales, which is estimated in total, but is failing to control adequately. It's increasing. As part of the consultancy report, you are considering recommending to DCS company that it commission a specialist environment and sustainability consultancy company to assess these issues at a DCS company. Mean you need to provide recommendation how company can tackle this issue. Draft a concise section of the consultancy report which construct the case for me. We need to argument in favor regarding what? The thing that has been explained after far. So we need to provide argument in favor. Commissioning an environmental and sustainability audit, like company should move towards environmental and sustainability audit. Environmental audit. No. Environmental audit. It's not a industry market. It's physical environment. It's physical environment, ecological. Environmental accounting, environmental auditing, we covered in ethics area last chapter. EMAS, ISO 14000. Of DCS company from both a financial and environmental perspective, suggesting ways in which the consultants might assist DCS company managers to become more sustainable in the management of DCS company carbon footprints. So first we will discuss about sustainability. What is sustainability? Meeting the need of present world without compromising the future. And to become a sustainable business, you need to focus on economic responsibility, social responsibility, as well as environmental responsibilities. Environmental responsibilities mean you should be care about the environment, physical environment. And here there is concern that a company is increasing carbon emission as compared to previous 4 years data. And the reason behind this could be lesser investment in new advanced technologies, new assets. Or there could be other areas like company have expand operations, company is producing more, that's why CO2 emission is more, but that is not evidenced from the financial results. And there is concern that the government is going to impose more carbon tax on our companies whose carbon emission is higher than expected or higher than a certain level. And those tax could affect the cash flow of the company severely. So companies should move towards environmental audit. How a company can establish environmental audit either through EMAS, Eco Management Auditing Scheme, or through ISO 14000 compliance. In EMAS, company will be focused on control plus report. While in ISO 14000, company will be following a EMS system, mean companies are focusing on control only rather than reporting, because reporting will be done by ISO certificate. But we can discuss about EMAS as well. If we are not meeting criteria for ISO, we can adopt our own standard, our own policy, the own policy of the organization. That is what EMAS, Eco Management Auditing Scheme, that you can adopt according to ISO policies as well. So this we need to discuss for 5 marks. Having 2 professional marks by giving a reference of EMAS ISO 14000. I will be moving forward. So till now 60 marks we have covered. Still 40 marks left. In the October board report, the executive directors refer to a number of factors affecting DCS company and the need to choose one of 2 alternative strategic options. You now need to do the following. There are 2 options: realignment and refocus. Draft a section of the report to identify and briefly discuss 3 main risks which DCS company currently faces, and plot them on a heat map. Heat map means probability impact matrix, recommending appropriate strategies to manage those risks using an appropriate risk management framework. Risk management framework is that TARA probability impact matrix. So we need to explain 3 risks that companies are facing. We need to plot them on heat map, and we need to provide appropriate strategies, mean which risk should be avoided, which risk should be accepted, reduced, or transferred. Yeah. So what we will do, we'll put that box here, like impact could be low, could be high, and probability could be low, could be high. Is that? And if we try to plot 3 risks, 1 risk was environmental risk. Carbon CO2 emission is high. Its impact and probability is what? Not low. Company's CO2 emission has increased. So we can say medium. Impact currently it's medium, but if government impose more carbon tax, its impacts could be high, but currently it is medium. So we'll say that risk is coming where at middle, environmental risk. What company should do regarding this? First, we need to explain how it is medium. Now we need to provide strategies. What company should do regarding this? No need to write down. Just we need to, this is a heat map. Under this, we need to plot 3 risks. So as its probability was medium, impact was medium, so I have plotted here. Then underneath, we will put a heading environmental risk. Will explain how it is medium, and the strategy company need to take take steps to reduce this CO2 emission by improving technology, by investing in more advanced technology based asset. So that company should reduce it. Is that? What other is business is facing? Staff shortage, unable to even recruit more staff. This could create operational risk. What's the probability and impact of this operation risk? What's the probability and impact of this operation risk? This operation risk is having high impact. Is that? Yeah. But currently we can say its probability is low. So we can put here. If probability low, impact is high, what company should do? If they unable to appoint caliber people, they can transfer this task to any of the recruitment agency. They can help the company to recruit caliber staff because they are having a data of so many people. From that data, they can analyze different CVs application. They can call and help the company to arrange caliber people. That is operational risk. Yeah. Company should transfer this risk to recruitment agency. Recruitment agency. What's their role? They help the people to find a job, to get a job. The company can get help from them. Even they will be happy. What else risk companies are facing? Financial risk companies are facing. Financial risk, that's why you are going for other strategy, other option, because your sale has declined, profitability has declined, even so many ratios have declined. So impact is also high. Even I will say probability will be higher. So financial risk. What company should do regarding financial risk? Company cannot avoid this. They need to control this. They need to control this. How company can control this? Company need to adopt different strategies, different policies. They need to choose one of the strategic options so that they can work on it. They should adopt new policies for the business, new plan for the business. And while working on it, company will be able to improving its financial performance. Because this is the main purpose objective of the organization that company is losing. So this is a heat map. Under this heat map, we need to plot 3 risks. We need to explain each risk separately and provide recommendation how company can manage this risk. How many marks? 6 marks are there. Are you with me? Part B, 2B. You are reviewing the spreadsheet prepared by your colleague Freddy Lithium, which evaluate the strategic choice facing DCS company in the next 3 years to ensure its validity in supporting your recommendation in the consultancy report. Critically evaluate the content of spreadsheet, including any assumption made by DCS company board. You need to critically evaluate that spreadsheet. If we move towards that spreadsheet, in fact, we have already critically evaluated that spreadsheet. Yes, this spreadsheet. Yeah, so first we will say company have compared 2 options, refocus and realignment. While company is mainly discussing about 3 options, and the first option is what? Do nothing, where sale will be decreasing, declining by 10% each year. So this calculation showing only 2 options. If company performed some calculation on do nothing, third option, then might be the decision could be different. So do nothing not considered. Second, according to refocus strategy, company will be able to maintain their revenue. If company do not refocus, mean do nothing, revenue will decline by 10%. How company have calculated this 10% decline in revenue over the next 3 years? Either due to poor economic condition because economy is in downturn, either due to lower demand of company products in the market, and how this 10% is calculated based on historic data, based on market research, based on taking data from any of the expert. So there is no information given. So this doesn't seem realistic. And third, you have calculated 3 different scenarios. If moving towards realignment, there are 3 scenarios like sale will grow by 25%, 15%, 10%. And their probabilities are 60%, 30%, 10%. How you analyze these probability and growth? From where you got this information? Either observe any of the business model, either from any of the past record of the company. There is no information given. Even these scenario are having a higher probability on higher growth, lower probability on lower growth, while in reality, there could be lower probability of high growth and high probability of low growth because there is prediction of declining sales. So in declining sales, especially when the market conditions are in recession, there will not be high probability of high growth. There will be high probability of low growth. So this doesn't seem realistic. Fourth point, you have discovered that by moving on realignment strategy, there will be additional fixed cost that you are saying will be higher in initial year, but you haven't discussed that higher initial year. You have discussed a higher with higher growth, lower with lower growth. How it's changing? Because fixed cost remain same. It does not change according to your growth. Variable cost change according to volume, not the fixed cost. And if business moving towards realignment, there will be 500,000 cost saving in components. How this saving will be done? Which cost will be saved? Because if still you are operating with components, ultimately, if you produce less, variable cost will reduce, not the fixed cost. So there is ambiguity which cost this 500,000 include and how it will decrease. And then based on the information, you calculated the cash flow and you decided that 2 years, 11 months is payback period and realignment strategy should be adopted. But if we look at NPV, how NPV is calculated? Discount factor is given 12%. These are 3 cash flows. First is what? Minus 0.091 multiplied by 1.12 raised to power 1. This figure is minus 0.018 multiplied by 1.12, 12% raised to power 2 because we are multiplying. This 12% discount factor. And then third figure is positive, so plus 0.117 multiplied by 1.12 raised to power 3. And if we calculate its NPV, that will be what? Negative 11,000. And based on NPV, this realignment strategy is having a negative 11,000 NPV, so should not be accepted. Mean this option of realignment should be rejected. Company should go for other option, either refocus or do nothing. While on payback period, the decision is different. So this we can discuss one point here. Yeah. So these 5 points we can discuss. Mean do nothing was not provided in the spreadsheet, and a 10% decline. How you calculate this 10%? It could be different over the years, either based on historic rate, historic data, either based on market information. What's the source of that information? And growth is probability, how you calculated this. Even with higher growth, there is higher probability, while in reality, there is low probability of getting more. And then these fixed cost increase, higher growth, more, lower growth, lesser, while it does not change according to volume, it remains fixed. And how the 500,000 fixed cost leading to components will be saved, what this fixed cost include, how this will be saved, there is no information. And based on NPV, the decision is rejection rather than acceptance. So how many marks we have evaluated this? How many marks we have evaluated this? For 5 marks only. Now part B2, prepare some key recommendations for the consultancy report using appropriate supporting evidence to advise which of the two strategies refocus or realign DCS company should implement. Which option they should implement? Either refocus or realignment. For 5 marks, we need to discuss. If they focus on refocus, this means they should focus on more cost efficiency in data communication. They should focus on more marketing in data communication because this is their main area. So they can at least maintain the revenue, but there is no increase in revenue. At least they will be able to maintain the revenue. But there is a high demand in the market relating to other technologies like cloud computing, big data analytics. And if you don't focus on that, might be in future, the demand for these components will become lower and you will not be able to deal with the competition. When we will not provide proper solution, we'll discuss both options, pros, cons of both options. And then we'll discuss about realignment. Realignment is about shifting resources from components towards system and support. And if you shift there, if the calculations are accurate, based on that you have performed this spreadsheet, if the calculations are realistic, then a company should move towards realignment. Realignment. If the calculations are accurate based on realistic data, then company should move towards realignment. But again, NPV is negative. Might be some cost, fixed cost calculation is wrong. Might be some fixed cost is different than what they have used in the calculation. So they need to decide, as well as either they are choosing realignment or refocus. They should focus on the customer as well, what they want. What they want. And if there is huge demand of big data analytics and cloud computing in future, you should adopt that business model. They need to reanalyze that future demand for components and then decide accordingly. We will not provide exact recommendation they should do this. No, we'll discuss pros, cons of both by keeping in mind market, customer expectation, and other two technologies that are in highly demand are 5 marks. This one is difficult part. The merit. Number 3, you have highlighted from your interview with Java Pariah and from your notes from the middle management focus group meeting that there are some key stakeholder management and engagement issue at a DCS company. You are now preparing working notes with relevant visual aids, which will form a key part of your presentation of the overall consultancy report. For 9 good marks, I don't know. Let's see. I haven't read the requirement. Using appropriate stakeholder analysis. Yes, Mandometrics. But we don't need to explain Mandometrics. Evaluate how the relative power and interest of the following 3 stakeholder groups and the strategies for engaging with them should have changed after DCS company became a public limited company. I mean, we need to discuss the power and interest of all these 3 stakeholder before listing and after listing. Before listing and after listing. If you look at shareholder, before listing, there was no shareholder. So before listing, there were no shareholder, only Java Pariah was the main owner and he was managing the company as a CEO. So for other shareholder, there was no power because they were not there. Even their interest was not there. So they were considered minimal effort. But now as company became listed, so being a listed company, shareholder power is high as well as their interest is also high. So they have become key players. So what company should do? Company should highly satisfy, highly informed them. Employees before listing, they were not part of trade union. They were having high interest but low power. Mean they were keep informed. But now 60% of the employee after listing have joined a trade union. Trade union, labor union. So they are having power as well. The company cannot take decision against them. Otherwise, they will take action because they are part of trade union group. So now they are becoming key players. So company need to focus on them as well. Lenders, bank, before listing company haven't obtained long-term finance. Company was operating either through retained earning, owner's investment or short-term finance. This means lenders were having no interest, no power. They were minimal effort. But now after listing company have took long-term finance. This means they are having high power and interest. If company is paying them on timely basis, there will be less interest. So they are what keep satisfied. So company need to keep satisfy them while paying them interest and a loan installment on time. This we need to discuss for how many marks? 9 marks. In what is power interest before, what is power interest after, and what a company should do now. Are you with me? Last requirement. Criticize the CEOs and HR directors' ethical and professional behavior. Ethical and professional behavior relating to the design, conduct, and reporting of the staff satisfaction survey. Criticize ethical and professional behavior. Integrity. Have they met the integrity? Straightforwardness? No. No. Integrity, they are not meeting. They are not straightforward. They are saying we will keep you anonymity of the results relating to employee survey, but they are not keeping it as a anonymity. They are getting information who is providing what kind of a survey, and they are threatening that person taking action against that person, mean realizing that person that you have provided negative feedback. Objectivity. Objectivity. In the main purpose of getting a staff survey is what? To improve services, so that they can improve staff satisfaction, motivation, so that they can make job place happy for the employee to reduce turnover. But they are mainly concerned with the question has been designed with positive feedback rather than negative feedback. So they will not be able to achieve main objective of the survey. They are not focusing on objectivity. Confidentiality. Are they keeping confidentiality? No. They said they will keep it confidential who provide negative information about the issues about the company, but they are not keeping it confidential. In fact, they are threatening the employee to not disclose in the public, otherwise you will be facing consequences. This means they are going to promote a culture of secrecy. And in secrecy culture, due to shadow hierarchies, there is more chance of corruption as well. And then we will discuss about professional behavior. Are they professional or showing professional behavior? No, they are threatening the employees. If you will inform anybody else, you will take the action. So they are not showing professional behavior. Even they are not complying with the legal implications, because employee are protected through employment legislation. If you are threatening like this to the employee, they can take legal action against the company. These four heads we need to discuss for 5 marks. Is that? Professional competence don't need to discuss because there is no information about competence. Honesty is integrity. Honesty is integrity. Finish. 18 marks. 5 marks. Stakeholder for 9 marks. Even if we discuss the 3 headings for 2 marks each, we can cover 5 marks. So that's it. Try to cover this case study properly by reading the answer. Try to attempt it in written form. Next class, we will discuss about one more case study.